Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update, Johnny. This is a market in transition. If I'm a buyer, if I'm a seller, I need these updates to find out what's going on. Let's go right to supply and start with the basics. 6,379. Show me that chart.
Yeah, not much transitioning happening on the supply side. It's essentially going sideways. It looks like it might be at the top of the hill, about to head down, but down 2% on the week. But that's not quite a trend yet. So let's see where that goes into the summer.
Exactly. It's a little too early to call that trend. I guess we're going to have less listings coming on the market as we look forward to the summer. We're probably going to have less demand also. With both those fading, yeah, I don't know where supply is going to go. I'm really confused on that. We'll see what happens over time. Let's shift to pending sales, our measure of demand in Manhattan, 4,774. John, show me that chart.
So this is another one that's going sideways. Essentially, it's down 0.5% from the week before. The week before that, it was down 0.2%. So it looks like the top of pending sales might be in. I would expect that number to decrease into the summer, but still well above seasonal averages.
I would too, Johnny. I would too. I think we're going to look back one day at pending sales and be like, wow, remember when we were in the 47 handles over there? I think this is probably going to fade down. But just so you guys know, the market pulse, which takes into account both pending sales and current inventory trends, that is just in a mixed sideways pattern. It's trying to find out which way it's wanting to go. If you ask me where I think it's going to go, I think it's going to go down for the next leg, but that has not happened yet. So let's go shift to the weeklies and see what's going on over there. Johnny, I'm looking at supply. 420 things came on the market. That's a tick up. Show me that chart.
That's a tick up. That's almost 30% higher from last week. And 420 is nothing to sneeze at for sort of a summer month. That's kind of what you would expect. If you draw that line all the way to the left side, it's going to line up with some of the earlier months of the winter, January, February. So that's kind of feels like where we are right now.
Yeah, I guess if you're buyers out there right now, you're hearing about a scarcity of quality product. I guess scarcity of quality product that's priced properly, I guess, is a better way of saying it. And there's not much of those out there, even though supply has been rising. So if I'm a buyer, yeah, I want to see some of that stuff come on. If I'm a seller, I don't want to see that kind of stuff. I want to see supply down. I want to see contract activity up. And when I'm looking at contract activity right now, it is not up. It is in the 257 level for 1 week. That is down just a tick. Johnny, show me that chart.
It is down by about almost 2% or so. And this is kind of where we talk about the slowdown. This is kind of where most people are feeling it. It's these weekly contract signs, which honestly, they've been going down since mid-May. I think they peaked early April and they've been kind of oscillating, but the trend is definitely down on contract signs on the weekly level. And, if you look back on some of the weeks, they've been down 20%, 30%. This week was down, compared to last year, nearly 13%. So that's definitely a slowdown feeling. But again, look at that 2019 line. I don't want to talk about 2021 because we know that's way out of this crazy high. 2020, forget about it, but look at 2019, right? So we're still above 2019. So we're slowing down from a very high level. We're going to get into this in a second when we get into some deeper look into these numbers. But the slowdown is happening here, except it's not as bad as you would think by just looking at the data.
Okay, so the speed limit is 60 miles an hour. We were driving 90 miles an hour last year, and now we're driving 65. So that's exactly what's going on right now. We're still above the speed limit. We're still going fast, except relative. We are now going much slower than we were going before. And it's all about the relative kind of move. That's what we all feel. And I just want to point out, 257, Johnny, on a weekly level, right? You multiply that by 4 weeks in a month. You add a couple of days. You're looking at about 1,050, 1,100 on a monthly basis based on this pace. And if I go to 1 month right now, we are at 1,340. So this is how, in my mind, the weekly pace that we're at right now, if we remain at that level, that is a negative bias over time to this number. And that's the number I'm looking at to see how far we go during this cycle. We'll keep an eye on it. John, let's shift right now. This is a wonderful chart showing you the net change of seasonality contract activity, what we're supposed to get in terms of how many contracts per season each month, and what we actually book in contract activity each month. If it's green, that means we're above seasonality. If it's red, that means we're below seasonality in terms of monthly deal volume. And this is a beautiful chart to show you just how, the whipsaw. Right? Look how strong down we went. And by the way, that is a buyer's signal right over there. And how we went straight up right over here. And by the way, that is a sell side signal right over here. And it also just shows you how long we've been in a seller's market. And it looks like we're starting to finally fade from this right now.
Yeah, I would agree with that. And I would also say that, the depth of the red bars is phenomenal when you look at this. And that's because the market literally came to a stop, right? Everything was on pause. look at the reopening bars right after it. Look at the length of those bars compared to the ones in 2013 on the far left. Look how just how much taller they are. I mean, that gives you a sense of that relative strength of the reopening demand was just at massive levels compared to where it was. So this is the point at which we're slowing down from. And to go back to the 120 mile an hour analogy, yes, we were it was like a Bugatti in Montana, and now we're sitting in a Ford on the FDR, right? It's like, we're still moving, it's just not as fast and not as sleek.
Yeah, if I'm a seller, you need to understand the market. All right, this market is fading. It's fading from a high level. We're still above. That's why it's green. We're still above seasonality, but the trend is down. If I'm a buyer right now, I mean, I'm keeping my eyes open because what I'm looking for is I'm looking for some of this stuff. I'm looking for the red stuff on this. That's when you might have some leverage and some negotiability advantages, and that's what I think is coming up right ahead in the near term. So I would focus on that. Okay, John, let's shift now to the final chart of the day. We want to show you, this is a shout out to Roberto Cabrera, who's asking about this chart to get updated. This is showing you average listing discount negotiability by days on market, right? And it's quite interesting to see, even though you have to be very careful because this is March's data, right? That was March. This is June, June, very different time. But take a look at the latest information and reading on the under 30 days on market bucket. These are the sellers that priced correctly. There's zero discount there. Right. You really need to go to the 30, 60, 90 days to get that 3 to 5% discount, John.
Yeah. And as we enter the summer and we have contract volume slowing down and we have supply increasing a little bit, these numbers, these listing discounts, they're all most likely going to tick up. I don't know what's happening in the over 120, but it's most likely going to tick up too. So here's my bottom point. My bottom line is that everybody knows, and this chart demonstrates that if you've priced it right, you're going to sell quickly and you're going to sell at or near your asking price. That's sort of one of the tenets of pricing right. But this chart tells me that it's going to be much harder to do that because we've gone from this market's in an entirely different place and the spreads are wider. So it's going to be a lot harder to find that price. So you got a lot of work cut out for you to find that price. But if you do, you'll still be rewarded for it. You might not get asking price, but you might be down 1 or 2% in negotiation. So you're still doing very well. You're just not going to get someone paying over ask just because it's the only place on the market these days. Yeah,
the worst thing a seller could do right now is get psychologically anchored to a market that changed, right? And these numbers right here is anchored to a market that was different, right? And if you can get these scenarios, that is your best case scenarios at this point, right? And if you can't get those scenarios, that is probably because this market has shifted, it has changed. It's a different macro world. Buyers are bidding differently, and you need to adapt to that change. Right. I think we're going to look back at this and this will end up being the high watermark for this series, this data series. John, thank you so much for taking the time to put all this data together. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers, just visit our forum right down here. If you want any of the reports that John whipped together, it'll be right over here in our premium reports and services. Other than that, this has been your weekly Manhattan market update. We'll catch you next time.